There's two answers to that question. One has to do with the fact that, when you screen it, the universe and the way that we screen it, you do end up with certain sectors where we can find more opportunity than others because they're very present in our universe. And so, and the second part of that is, of course, we're not just going to invest in a company because we think it's in a nice sector if we don't actually think it has fundamentals. So this is not at all about kind of just closing our eyes and hoping that companies that pass our ethical screens go up. But we've kind of developed through time a pretty good understanding of the different sorts of business models in those sectors and what we're looking for. And so that, companies like, if I think about our investments in utilities, they're predominantly in the gentailer sector in New Zealand, which are, geothermal and hydroelectric energy resources. Look, we just see a lot more demand for that sort of energy through time. Contact's got the ability to reinvest at the moment in a significant project. And why do they have that opportunity? Because they're displacing some gas in their business. Within the healthcare sector, look, we're real believers in the importance and the ability of healthcare technology to transform lives through time. And it's not just within the sort of obvious medical device companies. We're seeing companies like NIB, team up with healthcare technology partners that are helping to kind of in terms of preventative health. And in fact, if you look at the private healthcare sector, there's a real push to really get on top of some of the issues that have been created around sustainability and pricing in that sector. And I think COVID's given them some opportunity to tweak some of those things. IT, look, we're just interested in disruptors, scalable businesses, companies like PEXA, which we think is, a scalable disruptor. I'll give you a smaller cap example of a company we own called Big Tin Can. It's a company that doesn't produce a lot of earnings now, but we think it's a business that's scalable. It's got over $100 million, of annualised recurring revenue. It's a sort of business we can think produce very nice margins through time. It's well funded. And we can find offshore comps that are trading at much higher multiples. So if that company can derive the sort of margins we expect it will at maturity, and you can buy it now at what seems to us an attractive multiple, they're the sort of opportunities that we're looking for.